IRS Warning 2026 Report Foreign Accounts or Lose Citizenship. The letter arrived on a Tuesday. No phone call before it. No warning. No time to prepare. Just an envelope with the IRS seal, and inside, a notice that would change everything for a family who thought they had done everything right. A compliance check that federal agents had flagged, escalated, and referred all within 72 hours. A sudden knock on a door that had felt safe. A bright seal on a government document demanding answers that seemed simple, but weren't. This didn't unfold over years of legal battles. It unfolded in 3 weeks. 3 weeks that could erase a decade of building a life in this country. 3 weeks that could cost someone their green card. 3 weeks that could strip a naturalized citizen of the very passport they waited years to hold. One wrong move here, one missing form, one undisclosed account, and you could be facing criminal charges, deportation proceedings, or forced renunciation. What thousands of immigrants didn't know crossed a line that the IRS and the Department of Justice had quietly been drawing for years. And when that line was crossed in 2025, federal authorities did not hesitate. They responded with speed, precision, and a level of enforcement that shocked even experienced immigration attorneys. Most people panic when they see an IRS notice. They make the same mistake. They assume it doesn't apply to them, or they ignore it. But today, you're going to do something different. For several years now, there had been signals, not from headlines, not from press conferences, just signals, that the federal government was preparing something more aggressive than most immigrants had ever seen. The IRS has been persistent, yes, but also increasingly coordinated in that approach. Their actions followed a pattern, a buildup, almost a countdown. But what triggered real concern inside immigration legal circles this year was that the pattern suddenly accelerated. Tax attorneys who monitor FBAR and FATCA compliance recognize the indicators. The surge in automated notices sent to green card holders. The cross-referencing of foreign financial data with visa and citizenship applications. The sudden cooperation between the IRS, USCIS, and the State Department. The quiet expansion of what the government considers a reportable foreign financial interest. And when multiple federal agencies start talking to each other about your money, something loud is coming. Early in 2026, the IRS and Treasury Department confirmed what they described as a coordinated enforcement escalation, including data sharing agreements with foreign governments not seen in over a decade at this scale. These are actions federal agencies only take when signaling something specific. A crackdown on willful non-filers. A push to tie financial compliance directly to immigration status. Or a new phase of FATCA enforcement targeting long-term residents and naturalized citizens who still maintain accounts abroad. Observers weren't sure which one applied, or whether all three did at once. But one thing was clear. The government was changing its enforcement posture and doing so without much public announcement. And when that happens without explanation, the people most at risk are the ones who never thought they had anything to worry about. The warning issued by federal authorities in 2026 was not routine. It was not symbolic. It was urgent. Immigration attorneys, after consultations with tax specialists, described the new enforcement wave as targeted, aggressive, and most importantly, retroactive in its reach, meaning they are going back years to find accounts that were never reported. But enforcement only works if people don't know it's coming. You now know it's coming. So let's talk about what this actually means, what the law requires, what the penalties are, and why this is directly connected to your immigration status in ways most people have never been told. Here is what the government confirmed this cycle. The IRS and the Financial Crimes Enforcement Network, known as FinCEN, have been receiving foreign financial account data from over 100 countries through FATCA, the Foreign Account Tax Compliance Act. That data is now being cross-matched with immigration records. If you are a green card holder, a visa holder with long-term presence, or a naturalized US citizen, and you have a bank account, investment account, or financial interest in a foreign country, you may be legally required to report it. The form is called the FBAR, the Foreign Bank Account Report. The official name is FinCEN Form 114. If the total value of all your foreign financial accounts exceeded $10,000 at any point during the calendar year, even for a single day, you are required to file. Not if the accounts are earning interest. Not if you're actively using them. Not if you transferred money. Just if they held more than $10,000 at any point. That's the threshold. And most people don't know it. They targeted green card holders who maintained savings accounts in their home countries. They targeted naturalized citizens who still had joint accounts with family members abroad. They targeted H-1B and L-1 visa holders who had been in the U.S. long enough to meet what the IRS calls the substantial presence test, making them tax residents even without permanent residency. This wasn't a random audit sweep. It was surgical. And that's what made the warning so urgent. Let me explain the substantial presence test, because this is where many immigrants get caught. You don't have to be a citizen or a green card holder to be considered a U.S. tax resident. If you have been physically present in the United States for 31 days during the current year and 183 days over a 3-year period, using a specific IRS calculation, you're a tax resident. And as a tax resident, you're subject to U.S. tax law on your worldwide income. That includes income earned abroad. That includes interest on foreign savings accounts. That includes money sitting in accounts that you opened before you ever set foot in the United States. The IRS does not care when the account was opened. They care whether it existed while you were living here. Now here is where the immigration connection becomes critical, and this is the part most people are never told. When you apply for naturalization, you sign a declaration under penalty of perjury that you have complied with all U.S. tax laws. When you renew your green card, officers can, and increasingly do, request evidence of tax compliance. When you apply for certain visas or extensions, tax records and federal compliance can be pulled as part of background screening. If USCIS or the State Department finds that you had unreported foreign accounts while you were certifying tax compliance, that is a potential fraud issue, not a technicality, not a paperwork error, a fraud issue. And fraud issues can result in visa denial, green card revocation, or denaturalization, the legal process by which the government strips someone of citizenship they already obtained. Denaturalization is not theoretical. The Department of Justice has an active denaturalization section. It was significantly expanded in recent years and has continued to operate aggressively into 2026. They have pursued cases where citizens were found to have made material misrepresentations during their naturalization process, and financial fraud or tax noncompliance can be characterized as exactly that. If you did not disclose foreign accounts and then signed federal documents certifying your tax compliance, that gap becomes evidence. The government has time. They have data from foreign banks. They have FATCA records going back years. And now those records are talking to USCIS in ways they never did before. Let me walk you through the penalties so you understand what is actually at stake here, because the range is enormous depending on whether your non-filing is considered willful or non-willful. Non-willful FBAR violations, meaning you simply didn't know about the requirement, carry a penalty of up to $10,000 per violation per year. Willful violations, meaning the government believes you knew and chose not to report, carry penalties of the greater of $100,000 or 50% of the account balance per violation per year. If you had an account for 5 years that you didn't report and it's deemed willful, the penalties can exceed the value of the account itself. And on top of civil penalties, willful FBAR violations are a federal crime. Up to 5 years in prison. A criminal conviction that will destroy any immigration status you hold and make it nearly impossible to ever obtain future status. Now I want to talk about FATCA separately because it operates differently and catches a different group of people. FATCA, the Foreign Account Tax Compliance Act, is reported on IRS Form 8938, which you attach to your regular tax return. The thresholds are higher than FBAR. If you are filing single and living in the U.S., you must report foreign financial assets exceeding $50,000 at the end of the tax year or $75,000 at any point during the year. For married filing jointly, those thresholds double. But if you are living abroad for part of the year, the thresholds are even higher, $200,000 and $300,000 respectively. FATCA covers more than bank accounts. It covers foreign stocks and securities held outside a U.S. financial institution. It covers foreign partnership interests. It covers foreign accounts with foreign financial institutions. It covers any financial instrument or contract with a foreign counterparty. If you have any of these and you meet the substantial presence test or hold a green card, you may have a FATCA filing obligation you didn't know about. Here is something very important I want you to understand about the current enforcement environment. The IRS has a voluntary disclosure program. This is your off-ramp if you have undisclosed accounts. It is not a guarantee of immunity, but it is a structured pathway that demonstrates good faith, and that matters enormously in how the government treats your case. If you come forward before the IRS contacts you, you are in a fundamentally different position than if they find you first. The streamlined filing compliance procedures are available for non-willful violations. There are two versions, one for U.S. residents and one for those living abroad. They allow you to file amended returns, pay a reduced penalty, and avoid criminal referral. But this window does not stay open forever. Once the IRS has opened an investigation into you, you are no longer eligible for voluntary disclosure. Once a foreign bank has turned over your account data under FATCA, which is happening continuously, the clock has already started. I also want to address something specific to the 2026 enforcement environment that is new. There are reports, confirmed by tax law professionals, that the Treasury Department is now using artificial intelligence tools to cross-reference FATCA data with Form 1040 filings to automatically flag potential non-filers. This means the process is no longer dependent on a human auditor spotting the discrepancy. The machine finds it. The machine generates the referral. And then a human agent follows up. The scale at which this can operate is unprecedented. Hundreds of thousands of accounts can be cross-matched in a fraction of the time it used to take. If your foreign account data exists in a FATCA reporting country, and most major banking countries now participate, there is a real possibility that data has already been received by the IRS. The only question is whether they've matched it to you yet. Let me speak directly to some specific groups who are most affected by this. If you are a green card holder who came from India, China, Nigeria, Mexico, Pakistan, or any country where maintaining a home country bank account is culturally common and practically necessary, pay close attention. Many immigrants maintain accounts abroad to support family members, to hold property-related funds, or simply because closing accounts in their home country is complicated. That is completely understandable. That is also completely reportable. Having the account is not the problem. Not reporting it is. If you are an F1 student who has been in the U.S. for 5 years or more, you may have transitioned from non-resident alien tax status to resident alien status without realizing it. That transition changes your reporting obligations completely. If you are on an H-1B or L-1 visa and have been in the U.S. for several years, run the substantial presence test calculation and speak to a tax professional about your obligations. If you are a naturalized citizen who still maintains accounts abroad, understand that your citizenship does not make you immune to these penalties. It actually raises the stakes because a finding of fraud can reach backward and affect the citizenship itself. Here is your action plan. First, calculate whether you meet the substantial presence test for the current and prior years. Second, inventory every foreign financial account, investment, pension, or financial instrument you have or have had since you became a U.S. tax resident. Third, consult a tax attorney or CPA with international tax experience, not just any tax preparer. This is a specialized area. Fourth, if you have unfiled FBARs, explore the streamlined filing compliance procedures immediately. Fifth, if you are preparing for naturalization, a green card renewal, or any immigration benefit, make sure your tax record is clean before that application is submitted, because USCIS is increasingly flagging compliance gaps. As 2026 continues, more enforcement actions will emerge from this coordinated federal push. More families will receive letters they weren't expecting. More accounts that felt invisible will surface in federal databases. But one thing is already clear. Knowing this right now does not make you a criminal. It makes you smart. It means you're prepared. It means you are protecting your family from a financial and legal crisis that can come without warning and move faster than any immigration proceeding you've ever seen. Share this video with your family, especially those who came from another country, who maintain accounts abroad, or who have been in the U.S. for years without ever hearing these words. FBAR, FATCA, FinCEN 114, Form 8938. It might save their life one day. Subscribe to Visa Status Radar for more protection. We protect you with real information as the next phase unfolds.